Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NextTrip Inc. quarterly report. NextTrip Inc. market capitalization of $0 billion is materially smaller than most of its industry peers of roughly $24 billion. NextTrip Inc. trades at a higher price-to-book ratio of 6.99 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The balance sheet appears very conservative, with liabilities representing only 26% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. NextTrip Inc. offers a wide range of travel-related services through its integrated platform. The company's product portfolio includes customized vacation packages, flights, hotels, tour, wellness vacations, cruises, and group travel options through NextTrip Leisure. For luxury and business travelers, NextTrip Luxury and Business provides access to hotels. In addition to these services, the company offers an integrated cruise booking engine through NextTrip Cruises and a travel agent platform called NextTrip Solutions. The company also markets its travel services through various brands, including NextTrip Vacations for direct-to-consumer leisure travel, 5-Star Alliance for luxury and cruise bookings, and NextTrip Business for small to mid-sized corporate travel. Furthermore, the company's booking engine includes media properties such as Journey TV, Compass TV, and Travel Magazine. The delayed payment booking option, Pay Delay, is also available to customers. With its diverse range of services, NextTrip Inc. aims to cater to the needs of various types of travelers in the United States and internationally. NextTrip Inc. (NTRP) has experienced a significant stock price crash of 51.85% in the past year due to several key factors. The company's non-compliance with NASDAQ regulations was a major contributor to this decline. In June 2024, NextTrip received a notice from NASDAQ for delayed filings of its annual report and quarterly reports, violating listing rules. Furthermore, in September 2024, the company was notified that its stockholders' equity had fallen below the required minimum, leading to another non-compliance issue with NASDAQ. These regulatory issues have raised concerns among investors about the company's ability to operate within the necessary guidelines. In addition to these compliance issues, NextTrip has been struggling financially. The company has a substantial debt burden and has been burning through cash rapidly. Its financial reports have shown weak gross profit margins and an alarmingly low operating income margin, indicating that operational costs are far exceeding gross profit. Analysts had predicted the company would not be profitable in 2024, and it reported a negative net margin of -5,183.5%. The announcement of a private placement financing in December 2025, intended to raise capital, led to a decline in stock price due to concerns about share dilution. These combined factors have significantly impacted investor sentiment, leading to the substantial decline in NextTrip Inc.'s stock price over the last year. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. Revenue growth is primarily driven by strategic business decisions, such as the acquisition of TA Pipeline LLC, which expanded the company's reach into large group travel organizers. The integration of TA Pipeline's customer pipeline with NextTrip's NXTwo booking technology and Pay Delay financing tool also contributed significantly to revenue growth. Additionally, cross-media leverage through support by NextTrip's media brands, the launch of NT's leisure travel booking platform, achievement of business milestones, issuance of contingent shares, customer purchases of travel packages, satisfaction of performance obligations under customer contracts, sales directly to customers, and other distribution channels all played a role in driving revenue growth. Furthermore, expanded audience reach through integration with Bluefish's digital solutions, increased advertising revenue from combined media assets, enhanced sales efforts with NextTrip utilizing Bluefish's strategic sales relationships, and increased brand awareness through flash marketing campaigns also contributed to revenue growth. On the other hand, revenue decline is primarily driven by competitive market pressures from other travel suppliers and distributors. Variable contract terms and seasonality also pose significant challenges to revenue growth. The net income of the company experienced a significant decline between 2024 and 2025. In Q3 2024, the company reported a net loss of $2,009,829, which decreased by 62.6% to a net loss of $3,275,566 in Q3 2025. For the full year, the net income decreased from a loss of $10,619,646 in 2024 to a loss of $10,630,953 in 2025, indicating a slight increase in net loss. However, the net loss for 2025 increased by 96% compared to 2024, reaching $10,889,368. The profit margins also underwent changes during this period. The gross profit margin improved significantly from -2.8% in Q3 2024 to 18.1% in Q3 2025. However, the operating loss margin increased from 237.7% in Q3 2024 to 256.9% in Q3 2025. The reasons behind these changes are attributed to several factors. The company experienced increased operating expenses across all segments, which contributed to the decline in net income. Additionally, decreased revenue growth in the media segment and significant investments in technology enhancements, supplier relationships, and marketing initiatives also played a role. These investments require additional capital to execute the business model, further impacting the company's financial performance. The company's debt level has undergone a significant change over the past year. According to the extracted summaries, the debt level has increased substantially, with specific details mentioned on pages 26 and 64. This increase in debt is likely to have a notable impact on the company's financial situation. On the other hand, interest expenses have shown a decline of $45,518 from 2024 to 2025. The interest expense associated with notes payable and other expenses was $30,040 in 2025, which is lower than previous years. Additionally, total interest expenses for 2025 were reported at $491,304, indicating a decrease compared to the previous year. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company has acquired TA Pipeline, FSA, and Journey TV assets. These acquisitions are expected to enhance the company's capabilities and expand its offerings. On the other hand, the company has also engaged in divestitures, which involve selling off certain assets or shares. One notable example is the change of name of Sigma Additive Solutions, Inc., to NextTrip, Inc. on March 13, 2024. Additionally, the company has sold restricted shares of common stock to various parties, including Caesar Capital, Denny's Suggs, KC Global Media Asia, LLC, and Johan Mossaheb, LLC. These divestitures are likely aimed at streamlining operations or generating capital for future investments. The company has a history of paying out dividends to its shareholders. Specifically, preferred stock dividends have been paid in both 2024 and 2025, with the amounts being $32,063 and $258,415 respectively for common shares, and $10,688 and $10,689 for preferred shares. This indicates that the company has a consistent dividend payment policy, providing returns to its investors on a regular basis. Concerns about inventory buildup or supply chain disruption exist for several reasons. The company's reliance on third-party suppliers for hotel and vacation rentals is a significant concern. If there is a supply chain disruption, this could lead to difficulties in obtaining necessary products. Furthermore, the use of API integrations to supplement proprietary content may also pose a risk. These partnerships are crucial to the company's operations, and any disruption to them could have far-reaching consequences. That concludes the financial summary for NextTrip, Inc. Feel free to comment below, and I will be happy to answer them when possible.